Swayam Prabha. Digital India. Educated India.
Continuing from the last session, let us move ahead with decision making. I said I do one or two more problems, work on one or two more problems before we move to the next topic, that is called budget. We will work on that. Now I have a problem, as you can see on the screen. That is what we call it as the product mix decision with a constraint. It's similar to one of the problems what we did, where constraint was mixing minutes was a constraint out there. This is even a little more basic problem. So again, what we are looking at, if you read this problem, it says the company is running an orchard with an adequate supply of labor, presents the following data and requests your advice about the area to be allotted for the cultivation of various types of fruits, which would result in the maximization of profits. The company contemplates growing apples, lemons, oranges and peaches. See, please note, these kind of problems are there in the textbook. I have picked up only from a textbook out there. They are given selling price per box, seasons yield in box per acre, material cost per acre, labor growing per acre, picking and packing per box, transportation is per box. And then there are some fixed costs out there, and the following limitations are also placed before you. The area available is 450 acres of land out there, but out of this 300 acres are suitable for growing only oranges and lemons. That means only 150 acres you can basically grow all the four out there. So what happens? The first constraint is 300 acres will have to have allocated between the two fruits, that is orange and lemon, whereas 150 acres can be allocated for any of the four different types of fruits out there. As the produce may be hypothecated to bank, area allotted to any fruit should be demarcated in complete acres and not in fractions. The marketing strategy of the company requires the compulsory production of all four types of fruits in a season, and the minimum quantity of any type of fruit is about 18,000 boxes. Please note the boxes here, what they basically talked about out here, 18,000 boxes. So there is a minimum constraint. Now, what is how many acres are to be allotted for each kind of fruit out there is what we are going to work on. Let's sort of go back to the Excel sheet and let us see out. Let me write out here apples, lemons, oranges, and then let us say peaches. These are four different kinds of fruits which basically they are trying to grow out there. Let us first note down selling price per box. Selling price per box. Let's go back out here. It says selling price per box because it's all per box. So we will convert everything to per box. We can do it per acre. Now let us since most of these costs are given per box, let us look at it per box out there. It's about 15, 15, 13 and 45 out there. So let me say it's about 15 rupees and then 15, 30 and 45 out in this particular case. Now what is the first objective? First objective is maximize revenue. That means what? There is some amount of fixed costs that are also there present here. This fixed cost inevitable. It doesn't say anywhere that it is not. So transportation etc. if you don't grow it may not be there, but let us keep, for example, you have transportation cost in this particular case, transport. I have a vehicle, the vehicle, there is a depreciation on the vehicle, that is also part of your transport out there. So that is inevitable, because the details of it I don't know. So I would assume that these fixed costs are inevitable, be it transport, be it cultivation and growing, be it land revenue. So what happens is all these are land revenue means land revenue taxes out there, land taxes out there. So all these are inevitable fixed cost. So what happens, this inevitable fixed cost is going to be there irrespective of which fruit you grow, how much you grow, what combinations of fruit you grow, that is immaterial in this particular case. So what's your first objective? First objective is to look at contribution per fruit or per box. How much is the contribution each box is giving me, each fruit is giving me, so that I can look at covering this fixed cost out there. So I will go back to that particular aspect out there, and then let me look at in this particular case what is the contribution. So to do that contribution, let me know what is the yield per acre. So what is the contribution per, what is the yield per acre? Yield per acre, if I look at 500, 150, 100, 200 out there, so it's about 500, 150, 100 and about 200 acres out. Yield, that is the yield per acre in the terms of number of boxes out. What is the objective? Again I repeat, objective is maximize contribution per acre out there. Is it maximize contribution per box? Yes, I don't deny that, but your yield is not the same for every type of fruit out there in the acre. For example, if you look at in this particular case, apple yields 500 boxes, whereas my oranges yield only about 100 boxes. So if I say my contribution, what I am going to look at is maximizing the contribution per box, I might get very high for oranges, but overall contribution per acre, it may drop because the number of boxes I manufacture of orange will be relatively less than the number of boxes I grow for apples out. So objective function changes slightly. That is, I will calculate, look at it per box, I don't deny that, but after that I am going to look at what is called as per acre, and I am going to say that the objective function is to maximize my revenue or maximize my contribution per acre out. So now I have number of boxes. Let's sort of have this out here. Now I am having what is called as material cost per acre. What is the cost? That is the variable cost, what we talked about. 270, 105, 90, 150, 275, 270, I am sorry, 105, 90 and 150. Now this is the material cost per acre out there, I am not denying that, but let us look at, because as of now I have the selling price per box, I don't have the selling price per acre. I can of course multiply it and get it. Let us find out the contribution per box and then let us look at the acre part of it, of course, because I will be able to explain the difference in that particular case. So material cost per box in this particular case, 270 is the cost per acre, number of boxes is so much. So material cost per box, I basically have all these material cost per acre per box for all these things. Now I look at the next one, that is labor growing cost per acre. Now what is the labor growing cost per acre in this? It says that 300, 225, 150, 195, 300, 225, 150, 195. Same way, let us convert it to per box. Labor growing cost per box. Per box, what is the labor going per box out there? So I am just converting it per box in this particular case out there. All these things. The next aspect what we are looking is, they have given everything else per box, picking and packing per box, transportation per box, picking and packing, and then transportation per box. Picking and packing per box is basically about 1.5 per box, and 1.5, 1.5, 3 and 4.5 if I am not wrong in this particular case. And your transportation cost also they have given per box out here. Let us look at your transportation cost. Transportation is 3, 3, 1.5 and 4.5, 3, 3, 1.5 and 4.5, 3, 3, 1.5 and 4.5. So now I have all the variable costs. Let me look at the contribution per box. Total variable cost. Total variable cost per box is what I am going to calculate now. That is where I have marked it in different colors out there, and total variable cost per box is what I have basically got in this particular case out there. I am just copying it out here. So now I have the total variable cost. Now let me show contribution per box. What is the contribution per box? Selling price minus the variable cost is the contribution per box out there. So this is basically what I am looking at in this particular case. Typically, if you have to rank now based on the what gives you highest contribution, I will say peaches is number 1, followed by oranges, followed by apples, and then lemons out there. Perfectly all right. But there is a constraint they have said. So what is the constraint? They said the constraint is oranges and lemons. So I would say oranges and lemons out there. This is the among these two. I will grow oranges more because orange gives you more contribution per box. And among apples and peaches, I will grow what is called as peaches more because peaches give me more contribution per box out. But what is your objective? Objective is maximize revenue per acre, not per box. Because what happens? Your yield in boxes varies. Your yield in boxes varies. So what is then? Let me look at contribution per acre. So this is the contribution per box. How many boxes I am going to get per acre? This is the number of boxes I am going to get per acre out there. So what happens? My objective function in this particular case is to maximize this part of it out here. We calculate contribution per acre. Now you can see that your ranking is different. For example, let us say I am going to introduce a column out here, row it here, and if I had ranked only based on the contribution per box, this would have been number 1, this would have been number 2, and this would have been number 3, and this would have been number 4 out there. That is basically ranking. If I basically do the ranking per box in this particular case, ranking based on per box, ranking based on contribution per box out there. If I basically do that in this particular case, what happens? This is the ranking. I am going to change the color of this too. Let me change the color of these two so that it is distinct out there. Imagine if the yield was exactly the same for all types of fruits, then I would use this ranking, yield maximizing contribution per box. Now what is my objective function? My objective function is maximize my contribution per acre because the yields vary per acre. So if moment I do this, moment I do the ranking based on contribution ranking per acre, you can see this is number 1, this is number 2, this is number 3, and this is number 4 out there. You see the 2 and 3 changes. Now what happens? Imagine I had no constraint. This entire 450 acres can be used for all types of fruits. I would say I am going to manufacture only peaches. Now there is a minimum constraint that 18,000 boxes you have to manufacture. Agreed. Then I will use that minimum after I finish the minimum criteria. The rest of the acreage I am going to use for manufacturing only peaches. And if there is a maximum limit constraint of number of peaches, boxes of peaches I can manufacture, then I would say I would move to manufacturing apples or growing, to use the word manufacturing, growing apples out. If there are no constraints. But in this case, there is a constraint. What is the constraint? That is oranges and lemons, first thing. There is a constraint. Now, 300 acres used for only for these two fruits. And then I will have to look at apples and peaches out there. So, in this particular problem, you may not really encounter that kind of a differentiation in your final answer, even if you had used this ranking and done, because there is no maximum limit out there. There is only a minimum limit. So, what happens? Imagine these two oranges and lemons, 300 acres done, 150 acres. I will manufacture minimum of apples, rest of it all I will give it only to peaches, because the ranking, though it is number 2, so it does not even figure out in this particular case. And even here the ranking, this is slightly, oranges are slightly higher than lemon. But if this varies substantially, then you will have basically problem. Anyway, let us keep the final answer away. I am looking at the approach. Approach is maximize contribution per acre. Now I will say, now what is it I am going to do? I will have to manufacture minimum acreage required for growing 18,000 boxes, 18,000 boxes. Minimum required for growing 18,000 boxes. I am going to knock off the word required out here, I think, for 18,000 boxes, growing 18,000 boxes. Now I will say I have about what is called as 18,000 boxes is what I have to grow, and my yield is 500 boxes per acre. So that means I need 36 acres. Now in this case, 18,000 boxes is what I have to grow, and my yield is 150 boxes. 18,000 boxes is what I have to grow, and my yield in this particular case is 100 boxes. And then 18,000 boxes is what I have to grow, and my yield is 200 boxes per acre. That means the total acreage utilized as of now with this is 426 acres out there. Now, total available acres as you know, 450. Only number of acres, that is acres used for orange and lemon, minimum quantity. Minimum quantity, how much is, what is used? That is 180 plus 120, that is basically 300 gone out there. Straight away I have utilized the 300 acres, as the problem says in this particular case. 300 acres are suitable for growing only oranges and lemons. So basically for growing the minimum quantity itself, I have utilized the 300 acres. So now what happens? Out of 450 acres, what is the acreage available for choosing the fruit with maximum contribution? What is the acreage available for choosing the fruit? 450 is the total available, 426 is what I have utilized, so 24 acres is available. Obviously, what will you do? You will allocate it for growing the fruit, that is peaches. So the excess acres allocated to what is the fruit, that is basically peaches out there, is what you allocate. So let us say total acres allocated for each fruit is, in this particular case, it is basically this plus 36 out there, and that is all. And I am just going to pull this in this particular case out here, that is all. So what happens? This is the number of acres I basically have, and this gives me, what do you call it, as 450 acres out there. Now what is the total contribution? What is the total contribution? 36 acres I have, per acre my contribution is 4680, that is the total contribution I have in this particular case out here. So I am just going to have this is the total contribution, and for all the fruits put together, and let me get this. This is what is my total contribution out here. In this particular case, that is all what I have basically got. Now less my fixed cost. What is the fixed cost in this particular case? If I sort of see this laundry list of fixed costs out there, cultivation and growing, and picking and packing, transport, administration, I am just going to copy this entire thing out here so that it becomes easier. And this I am just going to cut this and then copy it out here in this particular case. So what is my total fixed cost? My total fixed cost is, this is my total fixed cost going to be. So what is my overall profit or loss? It's going to be, this is the total contribution minus this is the fixed cost, and this is going to be my overall profit or loss in this particular case out there, and this is the maximum profit or loss that you will actually be able to get in this particular case out there. This is the maximum profit or loss that you will be able to basically get in this case. So what happens? This is the maximum profit you will get, whatever combinations you do. Given those constraints, I am maximizing the per acre contribution, and this is what you would basically get out there. The product mix. So what is the mix? The number of acres. This is the product mix out there. I am just going to bold it in this particular case out there. This is the product mix I will have. Right? This is a mix of number of acres I will have, and this is the maximum profit you will have with the constraint. You look at any other allocation. Hypothetically, let me keep changing the numbers out there. If I allocate this 114, that is the extra 24 out here, that is 36 in this particular case. Hypothetically, I am just doing out here 24 out here, and then I will say in this particular case minus 24. If I allocate it to apple, what happens? Your profit immediately drops. You would say apple is number 2. I allocated that extra 24 is not to peaches but to apples. It drops. Allocate it to any combination, it will basically drop out there. This is the best combination what you can basically get in this particular case. Okay, fine. We move to one more problem. We will try and solve it out there. We will try and solve one more numeric out here. And then before we move on to the next topic, that is what we call it as budget. This is a very simple exercise out there. PQ has been offered a choice to buy a machine between A and B. You are required to compute level of sales at which both machines earn equal profit, range of sales at which one is more profitable than the other, market price of the product is expected to be $10 per unit. My machines are A and B. The annual output is going to be expected to be 10,000 units for both. Fixed cost is going to be 30 and 16. Profit at the above level of production. That is, what is the production? This is the 10,000 units is the production, is going to be 30 and 24. Now what is the question? Question is, what is the level of sale at which both will earn same profit? Range of sale where one is going to be more profitable than the other out. Let us try and see if we can solve it out here. That is, in this case, machine A and machine B. In this case, machine A and machine B. What is the fixed cost? Fixed cost out there. Fixed cost of each of these machines is going to be about 30,000 and about 16,000 out there, as you can see on in the problem set out. Now what is the total cost? Total cost is 30,000, basically that is what you call it as 30,000 plus my variable cost is the total cost of this, and then it is 16,000 plus my variable cost is the question for this in this case. They also give what you call it as market price is 10, number of units. Let us look at that is in this particular case. I am just going to give a gap out here and say number of units currently manufactured 10,000 for both. Price per unit $10 for both, $10 for both. So total sale value this into number of units, price per unit into number of units out there, price per unit into number of units out there is the total sale value out here. Price per unit is the total sale value out there. So what is the profit in this particular case? Profit they have basically given out here. What is the profit? Profit is 30 and 24, 30,000 and 24,000 out. So what is called as my variable cost? My variable cost is very clear. This is my total sale value. This is the profit. This is the fixed cost per unit out there. So my variable cost is very clearly given out here in this particular case out there. My variable cost, the same thing out here. This is my total sale value. This is my profit I reduce. This is my fixed cost I reduce out there. This is the variable cost per unit. That is, if I have to say my total variable cost. What is the variable cost per unit? So that I can find out contribution. This is the total variable cost divided by number of units. This is the variable cost per unit out there. This is the variable cost per unit out there. So what is my contribution per unit? Contribution per unit is selling price minus my variable cost and then selling price minus my variable cost out there. In this particular case out there, selling price is basically this is what we will get out here. Now I go back in this particular case, I look at the fixed cost. What is the difference in the fixed cost between the two? Here it is 30,000, here it is only 16,000. Difference in the fixed cost between the two is 14,000. So what is the objective function out there? Objective function out here is the total cost has to be the same for both. That is the first question, that is level of sales. When both machines make equal profit out there, the total cost has to be the same for both out there. What level of sales? The total cost is the same for both. That is what we call it in this particular case is the number of units. So then now let us assume the number of units as Z or Z out here in this case. 1 second. I'm just going to okay. Let us assume what is called as this is the total cost where level of sale is has the same total cost has to be the same for both at what level of sale? Assume the level of sale where the total cost is the same for both to be alphabet Z or Z out there. So let us look at in this particular case out there total cost for machine A, total cost for the total cost for each of the machine at for Z units, total cost for total cost for the machine at Z units, will be, what did we do out here? 30,000 plus, what is the variable cost per unit? 4 Z out there. Let us say number of units is Z. I'm sorry. Whereas for machine B, you say 16,000 is the fixed cost plus variable cost per unit is 6, and then I will have number of units is Z. I just solve for Z. You can solve for Z out there, solve for Z. It's a very simple simultaneous equation. You solve for Z, you can get Z, solve for Z, you will get Z equal to 7,000 units out there. Very simple. 30,000 plus 4Z divided by 30,000 by plus 4Z and 16,000 plus 6Z, you can just solve, and then for unknown Z out there you can get about 7,000. Very simple, you can just solve it. So what happens? That is, at 7,000 units, at 7,000 units, the profit for both the machines will be equal. You want to try it? Let us try it. Let us try it. Number of units for both 7,000. Total variable cost, that is what we call it as, let us say contribution total, in this particular case, contribution total out there. That is per unit contribution is 6, 7,000 units, per unit contribution is 4, 7,000 units, fixed cost remains the same, fixed cost remains the same. What is the profit? What is the profit? Level of sale at which both earn the same profit is 12,000. At what quantity where one will be more profitable than the other? Very simple. Let me just change it in this particular case. See, all that you could have done is, there is a contribution difference of $2 out here. When will that be equal with the difference of fixed cost? Fixed cost overcharge out here, the difference in fixed cost is 14,000. 14,000 divided by the contribution per unit is $2 out there. You divide 14,000 by 2, you get the same 7,000 units out there. You don't have to do it in an elaborate way. You could have just done a simple calculation right there. I just did in an elaborate way so that the explanation is better. Now let us say I make this 7,001 unit out there. I make this also 7,001 unit out there. Which is more profitable? Product A will be more profitable. Machine A will be more profitable. Very simple. A gives a higher contribution. Fixed cost is also higher. It gives higher contribution. So once this contribution of 30,000 is covered, every additional unit you make, the entire contribution is coming to profit. Whereas in the case of B, moment you cover the contribution out there, 16,000, $4 is coming to you as profit. For example, let us say 6,999 in this particular case, 6,999 in this case. Fixed cost is not completely covered. So what happens? This gives you $4 more. That is, this gives you more higher contribution in this case. So if the level of sale is above 7,000, machine A is more profitable. If the level of sale is below 7,000, machine B is more profitable. Now why do I need this kind of a problem? Now I need to know which machine should I buy, machine A or machine B. I'll have to go back and calculate what is going to be my level of production. Then I will decide whether I do machine A or machine B. If my production volume is going to be 20,000-30,000, I directly go for machine A. No, I am going to operate in a very small scale. My volume is only going to be 5,000. Then I will go for a machine B. So I choice of these machines out there. So directly would have got out here, because why? The fixed cost is higher. The fixed cost is higher there. The difference is 14,000. That gives you difference in contribution out there. With you on this? So with this we sort of close the decision making part using the costing data. Now we are moving to the next topic, that is called as budgeting.